Good afternoon and welcome to another VSA Capital Technology and Transitional Energy podcast with myself, Phil Smith, analyst, and firstly, apologies for absence from our chief exec, Andrew Monk, who's in Durban in South Africa, the mining conference, and therefore this week I have on as guest Peter Matson, head of private equity. Peter, good afternoon to you.
Good afternoon, Phil. How are you?
Very well, and enjoying a sunny day in London.
It is indeed, isn't it? And it's going to stay that way, it seems.
Well, exactly. Well, let's hope that we can put a little bit of sunshine into people's afternoons. But I think, Peter, let's talk about interest rates.
Let's talk about interest rates. Well, let's start with US. So, as we all know, a lot of attention on inflation, and inflation in the US, according to the latest CPI data from over there, running around 8.5%, which is astonishingly high. It's a 40-year high. It's been driven by strong economic bounce back since the COVID and government spending and constrained global supply chains, and of course, rising commodity and energy prices. So last night, Fed came out and raised rates with 0.5% to 1%, which was slightly less than the 0.75% rise predicted by the market. And as a consequence, the market took that as a positive, and share prices rose quite significantly. The Nasdaq was up around 3%. The semiconductor index was up around 4%. So perhaps that's a positive. I mean, it's a balancing act here from the Fed, and the Fed chairman made some comments on the press conference after the decision, and view this as a chance sort of to get wages down and inflation down without having to slow the economy, and also not have a recession and not have unemployment rise materially. And he thinks there is a reasonable chance to achieve that. So let's hope for that, of course. But as I said, the share price is very strong towards the close yesterday in the States. And today we got our Bank of England having the same decision, but they raised rates with 0.25%, so they're now stand at 1%. And the Bank of England made commentary after the decision and actually warned that the UK economy might slide into recession this year as higher energy prices pushes the inflation above 10%. And that, of course, was not taken positively by the pound, which continued its fall and is now trading about 124 against the dollar. It was positive for the FTSE in the aftermath of this, and FTSE has continued to rise during the day after the decision. What's perhaps noteworthy here is that the board, the MPC, was not completely united on this, and also in the commentary around it. So three of the 9 MPC members actually wanted to have a 0.5% increase. But as we just said, it was increased 0.25%. But also the guidance following the decision was not a complete. It was 3 people that did not want the following statement to go in there, which says some degree of further tightening in monetary policy might still be appropriate in the coming months. So a bit of division within the MPC, but there we go.
Yeah.
So, Phil, what do you take on that?
Well, I'm kind of old enough to remember sort of bit of last time round when we started to see strong inflation, and I guess, you know, it's been a long time since, and so for the decision makers having experience of what to do it's a very, very tough thing, and trying to, you know, head for as they call it, a soft landing, and timing it so that that things don't overreact and slow down too much and cause severe recession. So it is difficult. I think the best thing that we can do for investors is just to point out where, when we're commenting on companies, often just whereabouts, whether the risk from some of the pressures that are being brought to bear, either in terms of spend or inflationary costs or whatever it is, so that that can be sort of factor that in. But also, as we said at the start of the year, Andrew and I, keeping an eye on what's happening with the supply chains, because remember, it was originally thought that inflation would be sort of transitory, driven by the bounce back, strong economic growth post, coming out of COVID. And the potential easing of supply chains, which were highly constrained. But now we've got the added factor in of energy prices, which are a big driver of inflation, but also the energy prices, what's happening in the energy markets for transitional energy could see an acceleration of activity there. So it's bearing all of this in mind when we're looking at individual companies and commenting on what's happening. So I guess moving on from that, Peter, into transitional energy, renewables, as it was always known. Bosch, one of Europe's biggest companies, they had full year results. And what was of note there is that they've said that they are looking at entering the hydrogen electrolysis market and investing 500 million euros in this area of business. We talked a lot about hydrogen and its place in the renewable energy chain, but electrolysis, of course, is using electrolysis equipment. Basically takes electricity and splits water into its components and of oxygen and creates and produces hydrogen. So interesting to see that Bosch, they're a serious engineering player. Many markets are getting into that. And they also commented, Bosch, of course, are well known in the automotive electronics space, and said that orders in electromobility, EVs, had exceeded 10 billion euros for the first time. And it's quite interesting, this, and BMW had their results today actually in the auto markets, and they were pretty good. I also saw that the owner of Peugeot Citroën had results, and again they were fairly good. But again, with automotive, it's going to see interesting to see how that performs, Peter, because of course cars are a big ticket item. If you've got inflationary pressure and consumers, under cost expenditure pressure, maybe the car markets will slow, maybe they won't. So it's another of these things that you've got to watch carefully and take a judgment on. But interesting to see Bosch getting into the looking at the electrolyzer markets. They've also said that Bosch this year is going to start production of fuel cell powertrains for trucks. And again, this is an area we've Andrew and I have often discussed on these podcasts, is hydrogen in transport and its potential application in trucks, where of course trucks are far more sensitive to weight and the weight of battery packs, etc. And hydrogen seems a good alternative. So there, Bosch quite active in that area.
Very exciting. Yeah.
Yeah, no, there we are. So that was a bit of very, very interesting news. Looking more to the sort of UK market, again, staying on the kind of the energy transition space, Ilika, the ticker is IKA, it's 170 million market cap. Ilika developed solid state battery technology, and they've got two types of product. They're called Stereax, which are micro batteries, and these go into Internet of Things applications, medtech applications, where you need small batteries with high energy density, but also they've got larger format batteries that are being developed for the electric vehicle and plug-in hybrid markets. And they said this week that they completed a study, and this is looking at what they call a Goliath pre-pilot line. But what they're looking to do is to develop very large scale manufacturing. And this week they completed the study of whether or not they could scale this up, large scale manufacture. And they completed a scale-up study alongside their partner Comau. I hope I pronounced that right, but they're part of Stellantis, who are big industrial automation specialists. And they concluded in the study that actually there are no technical barriers to scaling up or cost barriers. So that's encouraging news for Ilika. Moving on, because we are a little bit thin on news this week, Peter, in terms of companies, but I don't know if you saw Computer Center had a trading update.
Yes, I did actually. Yeah.
Yeah, and this is, so the ticker is CCC. The market cap is 3 billion, and this was a quarterly trading update. Now, we talked about Computer Center, a really interesting one. I mean, they are, they're kind of one of the go-to suppliers for IT solutions if you're a business. So you go to them, and they will, they provide consultation on security, data center, networking, tech, service desks. It's a broad area of IT, and they supply services in this area and equipment. And of course, they had a very good. I think during the COVID period, they did pretty well because, of course, companies invested very heavily in IT, and particularly for people remote working. But they came out with their quarterly trading statement, and they said that there's going to be a sort of more challenging comparison in terms of trading than the prior period, which is kind of understandable. But they said that the adjusted profit before tax for the end of first half for 2022 is likely to be behind in 2021, but they're operating in line with the historical seasonality of their business, which gives them confidence for the full year. So that is, I think, reasonably positive for them. And looking at its trading, it's 2.5% yield, of course, quite focused on yield, aren't we, in this interest rate environment? And it's on an EV revenue multiple of just under 0.5 times, EV bit of about 12 times 4 to 11.6 on 2% earnings growth. So it doesn't look overly cheap. But the thing is about Computer Center is it's been growing, but it's got a long track record of growth. It's a good quality business. So I still think that's well worth taking a look at.
Yeah. And then I also noted a very good performer this year, BAE Systems. They had a trading update, didn't they?
Yeah, they did. And look, it's one of our biggest defense companies. The ticker's BAE, market cap is 24 billion. And the shares, I was looking at the share price chart going back years. These shares are at an all-time high. Look, it's kind of understandable in the current environment. It's paying, even with the share price rise, it's still on a 3.2% dividend yield. And BAE Systems are, look, it's across the spectrum in arms, aerospace, naval equipment, security, and they had issued, just reiterating really full year guidance, firstly, and they're expecting sales rising by 4%, EBIT up 2 to 4%, EBIT up 4 to 6%, an underlying EPS growth of 4 to 6%, a very high free cash flow. So what they did say, which was quite interesting, was on the US defense budgets being very good for them. US defense budget of $743 billion, and they're saying it supports many of the key programs that they're involved in, which is what you would look for, because the US is obviously the biggest defense market, and that's in terms of combat vehicles, the F-35 fighter program, which they are on, and for electronic warfare and precision-guided weapons. So, it's had the run up, but it's still, 3.2% dividend yield. Doesn't look. I'm not an analyst on this one. It's on like PE 15 times and a PEG of 2.8 times. So perhaps not overly cheap, but perhaps a good long term, a good long term quality hold there, especially given what's likely to happen in the defence markets longer term now.
Yeah, indeed.
And yeah, I don't know if it's me with a comment on that one, Peter. And what was interesting about like BAE Systems also and Computer Center as well is they're very dependent on both companies on electronic components and sourcing components and global supply chains. And I've got to say, it's very impressive how these businesses are performing. And you get a sense that, if supply chains ease, then they've got the potential to do, even more.
Yeah.
So
Yeah.
another thing to kind of think about here is how are they, how constrained are they at the moment? I mean, they're specifically saying they're overcoming the challenges in the supply chains, but you just think, hang on, if things actually ease up for these companies that are doing well even in the current environment, what they could potentially do, and that's why.
So that's a potential upside for them, isn't it?
Yes.
Hmm.
Yeah, it is. And then the other one, of course, is in an inflationary environment, is their ability to pass on price increases. So when you're looking at company results now, it's going to be increasingly important to look at how much growth is coming from volume and how much growth is actually coming from pricing.
Yeah.
So, is the growth just coming through because companies are just raising their prices, or is it actually underlying demand and volume? Is that increasing? And of course, another key factor is going to be where they've got overseas exposure is currency exposure, because quite clearly the pound has been moving, against the dollar. But obviously currencies are, is going to become an increasing factor, I think, as we see interest rates moving around. So that needs to be borne in mind.
Very good point there, Phil.
Okie dokes. And then just getting on to a smaller one I spotted, which has full year results, was Director Plus, and the ticker is DCTA. 74 million market cap. They have final results, and this isn't one I'd had a look at before. Actually, it's a graphene technology company, graphene producer. And have you come across it before, Peter?
No, I haven't actually.
Yeah. Well, they had a good set of results. This was the full year to December, and they said that their product sales and service revenue was up by just under 34% to 8.6 million euros. And that they're and including grants, which of course they do get grants as a tech company, was up 39% to 9.5 million euros from 6.8 million euros the prior year. So good strong growth. And their loss situation, they reduced their losses from 2.6 million to 2 million euros, and they had closing cash and equivalents of 11 million euros. So well funded. But what was interesting about this, I think, firstly, it's graphene tech. You would expect there to be a lot of IP in here, and there is. They've got 19 patent families, 72 patents granted, 27 pending. So obviously quite a lot of IP in there. But in terms of sort of applications for their graphene tech, they do seem to be have products that are related to cleaning and washing in oil decontamination, dealing with oil sludge, dealing with waste processing. And during the year, they announced a number of contracts. So in March 21. They had completed draining, cleaning, and washing of an oil storage unit for Lukoil, and they had 0.4 million of revenue from that. In March 22, they said that their decontamination technology had been granted authorization for use in the US by the US EPA. Oh, wow. And that gives them an entry into the one of the largest markets for decontamination of oil spills. And in July 21, I've got my time ordering a bit wrong here, but in July they won a tender with OMV Petrom for a 4-year contract worth 3.2 million euros, and that's for treating 80,000 cubic meters of sludge and waste. So look, graphene doesn't always get, there's always lots of doubts about whether it'll get commercial traction or not, and how big are the markets. But this is an interesting little company. It seems to be making really, really good progress. So I'm going to take a further look at that one. So that's Director Plus, DCTA.
Okay, very good, very interesting. What else do we got? Do we have any other company results out? It's been a bit thin this week, hasn't it?
Yeah, it has, to be honest, Peter. There have not been, sort of seen many main results out from the States. Certainly, the UK market seems to have been very quiet in terms of results. So, I guess we will carry on scouring the news flow, but thinking obviously about inflationary impacts, keeping an eye on the supply chains, and yeah, very much look forward to covering things next week, Peter. But
so do I. I think I will be back next week and see you then.
well, I look forward to chatting then.
Thank you, Phil.
Cheers, Peter.